Okay, fixed strike vol wise, they're going to start throwing this in on a daily basis, so you can see the actual daily fixed strike vol moves, so you can get a bit more granularity about what's going on in the market maker space, and if there's anything you can glean from that. That was Friday's moves. Generally, we were small up 40 bips, so not a big move. That's a realized vol move of less than 8%, and we were seeing offers, particularly on the upside and at the money. So that whole setup there on the daily shows you that the street is still long gamma and happy to offload it into the weekend. That's quite normal price action going into a weekend when you just had a non-farms print that didn't move the market that much, and that vol does get offered. But it is just a sign that the street does sit long gamma right now and is likely to, if we don't move from here, from this 4,600 area, probably means that gamma position gets even bigger into Friday, which makes it even harder for the market to move unless we get material news out of the FOMC or CPI that shocks the market. And we had a similar setup going into last CPI. If you remember, we thought the market was pinned and wasn't going to go anywhere. We didn't think CPI was going to be that materially different, and we were totally wrong on that. CPI surprised the market to the downside. The market ripped, and the gamma just couldn't hold it, and we moved a lot, right? We'll see if that a similar thing plays out. I doubt we're going to get the same sort of move to the upside because the market's already now very much anticipating inflation rolling over, and we're seeing that across the board globally. So if anything, if we're going to get a surprise, it's going to be because inflation is hotter than expected. Market sells off because Powell doesn't, Powell comes in more hawkish as well in the presser, and we may see the market move down. If that happens, I do think the market is probably still long gamma down to 4,500 as well. So I don't think the market suddenly gets short gamma on the way down. So that means we might get a knee-jerk lower on a hot print. And then because the market's long gamma down there, they then come and buy a load of delta back and they take the market back up. So you might see some intraday chop around the catalysts where if it's a bearish piece of news, we drop, but the gamma kind of makes us rally back again, right? So look out for that sort of intraday price action, because that would not surprise me in the slightest.